Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SMARTONE Telecommunications Holdings Limited interim report. SMARTONE Telecommunications Holdings Limited offers a wide range of telecommunication services to both consumer and corporate markets in Hong Kong. The company's product portfolio includes voice, multimedia, mobile, and fixed fiber broadband services that cater to the diverse needs of its customers. In addition to these core services, SMARTONE also engages in the sale of handsets and accessories, providing customers with a one-stop solution for their telecommunication requirements. Furthermore, the company offers customer support, telemarketing, and wireless fixed services to ensure seamless communication experiences for its subscribers. The company operates under 3 distinct brands: SMARTONE, SMARTONE Solutions, and Birdie, each offering unique products and services tailored to specific market segments. With a strong presence in Hong Kong since 1992, SMARTONE Telecommunications Holdings Limited has established itself as a reliable provider of telecommunication solutions, backed by its parent company Sun Hung Kai Properties Limited. SMARTONE Telecommunications Holdings Limited market capitalization of $6 billion is materially smaller than most of its industry peers of roughly $29 billion. SMARTONE Telecommunications Holdings Limited trades at a higher price-to-earnings ratio of 11 times and a higher price-to-book ratio of 1.03 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 54% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has continued buybacks despite weak revenue growth, raising questions about capital allocation priorities. The company have a dividend yield of 5.75%. The income statement shows that the company revenue have been declining annually even though operating income have been improving. Although the drop in revenue is concerning, we can tell that management have been able to reduce cost. The primary drivers of revenue growth or decline can be identified through a thorough analysis of various factors. On the growth side, expanding premium and loyal customer base, scaling high-return growth segments, and robust growth in 5G home broadband business are key contributors to revenue increase. Additionally, higher handset and accessory sales, as well as increased adoption of AI, platform simplification, and streamlining of operations also play a significant role. On the other hand, revenue decline is primarily driven by a decrease in mobile telecommunications services, resulting in a $121,083 drop. This indicates that the company's efforts to grow its revenue are being hindered by a decline in one of its core business areas. To mitigate this decline and sustain growth, the company must focus on strategies that address the challenges faced by its mobile telecommunications services segment. The company is indeed generating positive operating cash flow. This is evident from the net cash inflows reported in the financial statements. In 2023, the company recorded a net cash inflow of $1,350 million from its operating activities. Furthermore, this trend has continued into subsequent years, with net cash inflows of $1,349,586 and $967,961 in 2025 and 2024, respectively. These figures demonstrate that the company is consistently generating more cash than it needs to fund its operations, resulting in a positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past few years. Initially, on page 12, the debt level decreased by 5% from $62 million to $59 million, indicating a reduction in financial obligations. However, this trend was short-lived, as the debt level increased by $8.178 million on page 48, reaching a total of $131,030,000. A closer look at the fluctuations reveals that the increase on page 48 was followed by another decrease on page 51, where the debt level dropped by $2,833 to $58,767. This suggests that the company's financial situation is dynamic and subject to periodic adjustments. In terms of interest expenses, a notable decline was observed on page 42, with a 4.2% reduction from $53,976 to $51,608. This decrease in interest expenses indicates that the company has managed to optimize its debt obligations or negotiate more favorable loan terms. Overall, while the company's debt level has experienced fluctuations, the interest expenses have shown a consistent downward trend. Management is emphasizing the company's commitment to delivering exceptional network performance and investing heavily in 5G technology. This strategic focus aims to cater to diverse customer segments by expanding services and enhancing customer experience through innovative new developments. The company is positioning itself as a leader in the industry, leveraging cutting-edge technologies such as AI to improve customer service and solidify Hong Kong's status as a global hub for talent and innovation. By prioritizing premium customers and continuously investing in its network and services, management is confident that the company will meet evolving customer needs and drive long-term growth. The company has a history of paying dividends to its shareholders. As stated on page 12, the company's policy is to pay dividends, which is further confirmed by specific amounts mentioned for dividend payments in 2024 and 2025. The declaration and payment of dividends are also acknowledged on pages 47 and 48, respectively. This indicates a consistent practice of returning value to shareholders through dividend payments. That concludes the financial summary for SMARTONE Telecommunications Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.